Good afternoon, everybody. My name is Chris Duffield, and I'm an account executive for New Line Mortgage. For about the next 30 minutes, we're going to talk about VA purchase loans and 1003 comprehension. If you could take a quick minute and shut your door and turn off your other devices, give me your attention for the next, like I said, 30 minutes or so. I'll try and make this a good little powerful training for us. This is actually the second of a two-part training. The goal is to get you very familiar with the 1003 so that you can learn what questions to ask that are not on the 1003 and what documentation you should be looking for. It's also designed to help you complete the 1003 100% and accurate. Okay, before we get started, I need to mention that this is the fourth training in a series of trainings designed to familiarize you with the VA purchase product and how to originate a loan based on VA purchase guidelines with New Line Mortgage. The first two trainings, we covered the pre-qualification process and some useful tools, the required forms to assist you in the process. The third training was a review of the first half of the 1003, and in this training, we'll review the rest of the 1003. Future trainings will cover what you need to do and understand to get the loan processed and into our underwriting and closing departments. Also, I'd like to take a moment and ask you for your business. As an AE, I'm paid commission, so the best compliment you can give me is to send me a loan. If you found my trainings useful and learned at least one new thing, please send me a deal. All right, let's get started. So we left off last training on, I believe, income and employment. Part 6 covers assets and liabilities, and if you haven't done so already, part of the training material that you can print from my blog is the training that I'm going to be reading through right now and a 1003. So you can follow along with that 1003 and this training if you'd like to. Okay, so the top of Part 6, Assets and Liabilities. If the borrowers already have combined assets and liabilities, they are completing the application jointly, and they are allowed to do so, and like I said, complete one application with combined information. So you would be marking here if they're completing the application joint or not jointly. Getting into the assets. This section covers the liquid assets available to be withdrawn within 30 days. That's basically the definition of a liquid asset. It has to be withdrawn within 30 days. The point is that's what would be needed if a borrower had to tap into reserves to make mortgage payment. So this section does cover those assets needed for closing and reserves. If reserves are required, the cash deposit towards the purchase held by the agent or seller and amount should also be completed. That means the earnest money deposit that's made payable to title company, and usually the title company holds it, maybe the real estate agent is. We need to have that information here, and if we are going to count this towards closing, then we need to document that this cleared the bank prior to closing. Going on to the rest of the assets, the depository name, account number, and balance at a minimum should be completed. The address is not as important as we don't accept VODs. If the borrower is using stocks or bonds, those depository accounts should be listed as well. So possible documentation requirements that could arise from this section. Like I said, the borrower must provide documentation of the source of the deposit. If it was from checking or savings, the withdrawal must clear the bank prior to closing to be given credit for it on the HUD. These funds are a credit against the down payment and or closing costs, and please know that cash is never an acceptable source for down payment, closing costs, or reserves to pay off debt. It's never acceptable in any situation. We always have to document acceptable funds. 2 months bank statements will be required at a minimum. Please know that all pages must be provided, even if they're blank. The source of all large or unusual deposits must be documented. One thing to watch out for with bank statements is NSF charges. I've seen what's called convenience fees and then overdraft fees as well. They could show up on a bank statement, and they're not acceptable. We can't have any of those in the last 12 months. And another asset, if we're using stocks or bonds, the value and the sale of that asset must be documented if, of course, they're going to sell that asset for closing. All right, moving on, other assets. So in this section, we're not necessarily looking for assets to close unless the borrower intends to sell an asset. This section really more or less paints a picture of where the borrower spends their money. And this may be useful in certain situations if you're trying to put together a complete financial picture of your borrower. The borrower's other assets should be completed to help demonstrate where a borrower spends their money. This could help answer questions like, why don't they have substantial savings when they make $20,000 per month? Where does their money go? Does the borrower collect something? Do they put all of his or her money in their business? Do they buy expensive cars? Do they buy real estate? If this section is completed, it helps draw some quick conclusions when an underwriter is trying to figure out where their money is or isn't. You'll notice that the sections on this asset piece have the schedule of real estate owned, which transfers over from your REO, and then vested interest in retirement fund. So that would include the amount the borrower is able to withdraw within 30 days, their vested interest, the net worth of their business owned. This would be a great place to complete that information. It does give an underwriter an idea of where their money goes. Automobiles owned, I would put every automobile they own, and then under other assets, you have to have a coin collection, horses, things like that are typically what we see here, especially if the borrower is going to sell that asset. You're going to want to list it here on the 1003. So some documentation requirements that could arise from this are typically none. Unless, like I said, the borrower is going to sell an asset, then you have to document that they own it. You have to document its value, that it's sold, so you need the bill of sale, and then you also need to document it being deposited into the borrower's account. All right, the liability section. So as per the 1003, you need to list the creditor's name, address, and account number for all outstanding debts, including automobile loans, revolving charge accounts, real estate loans, alimony, child support, stock pledges. Use the continuation sheet if necessary. All of the borrower's liabilities must be listed on the 1003. Typically, they're imported from the credit report. If they are not imported from the credit report, make sure to match what the borrower disclosed to what transferred over from the credit report. Liabilities to be paid off must be properly marked with an asterisk. You'll notice you have a section for your liabilities from your creditors. Typically, like I said, these do transfer over to the 1003 from the credit report. There are some liabilities that do not. Alimony, child support, separate maintenance, these all must be completed separately. There's a section here for job-related expenses. Actually, you do not list job-related expenses here and count it as a debt. It is deducted from the borrower's income and should be reflected in the income calculations, not the liabilities. So some possible documentation requirements under this section. The borrowers may need to provide a letter of explanation if they did not disclose all of their liabilities. So if you sat down and took the application with them and listed their liabilities, you pulled a 1003, you pulled a credit report and transferred the liabilities over to the 1003. And if they didn't disclose the debt, you may want to have a conversation with them as to why. And it's possible that simply slipped their mind, or there could be other reasons. If that goes into underwriting like that, if an underwriter can tell that they did not disclose liabilities at the initial application, an underwriter might ask for a letter of explanation. It's kind of a red flag on the loan if the borrower omits any information at all on that application. If any debt is marked to be paid off, the source of funds must be documented. That could be a possible documentation requirement. Mortgage debt other than the subject property must match the schedule of real estate owned to the dollar. Tax returns or rental agreements may be required unless the borrower is qualifying with the full payment. Divorce decrees, separation agreements, or separate maintenance agreements may be required for child support or alimony. Tax returns are required if the borrower has unreimbursed employee expenses. Don't list anything here if you don't know for sure, as it will trigger a condition if there's a number listed. Unreimbursed expenses will be deducted from income rather than treated as debt. So what that means is when you're talking to your borrower and you're interviewing them and you ask them, do you have expenses? Do you have expenses for work? Many times they might say yes. They may consider expenses as the mileage on their car that they drive to work, lunches, things like that. What you need to make sure you're asking your borrower is, do you file unreimbursed expenses on your tax returns? That is the way you should word that question, because you don't have to put those other expenses. The only expenses we care about are the ones filed on the tax return. Under the schedule of real estate owned, all of the borrower's residential property must be listed here. Residential property is considered 4 units or less. Over that is considered commercial and does not have to be listed. Commercial property of any type is not listed here. The amount of mortgages and liens must match the liabilities. List the PITI payment under mortgage payments and leave the insurance, maintenance, taxes, and miscellaneous blank. So running through these columns real quick, the first column, of course, is your property address. The second column is the type of property. You'll enter S if it's sold, PS if it's pending sale, or R if it's a rental. Then you list the present market value. And then the next column, the amount of mortgages and liens. Remember, that needs to match your liability section to the dollar. And then you will include any gross rental income. Unless we're using tax returns, you do not have to put an income figure there. And then you are listing the mortgage payments. And this is where I would put the PITI, principal and interest, taxes, and insurance. Put all of that under mortgage payments. And then under insurance, maintenance, taxes, and miscellaneous, leave that blank. And then the following column will have your net rental income. And I believe that calculates for you, maybe depending on the system that you use. So documentation requirements as a result of this section: all mortgages must be documented, i.e. the repayment terms and payment history. So if you have a mortgage that's held by a private party, perhaps, what you need to get is a copy of the note and the 12-month payment history, usually evidenced with canceled checks from the borrower. And then if a property is owned free and clear, title must provide a report as documentation. That's about the only way that you can document that a property is absolutely owned free and clear without question. Rental agreements, tax returns, and or reserves may be required depending on the situation. And then if the veteran wants to keep their current residence and purchase a new one, the following is required. The borrowers must qualify with the full payment unless they have a 25% equity position, evidenced with the 2055, and they can provide a lease agreement, evidence they've collected their deposit and first month's rent, and the transaction must be arm's length. There's a section underneath liabilities for alternative credit. Typically, this is not completed. But we don't have minimum credit standards. We've discussed this before, except for our FICO requirement. You need your FICO requirement, and you need your AUS approval. However, we may or may not be comfortable with the borrower's depth of credit and require more documentation. If they do happen to get an AUS approval and they just barely qualify, but perhaps we have a huge payment shock issue, maybe they're going, they're more than doubling their current housing expense, and they have very minimal debt. Maybe we're even pushing the DTI under that scenario. We may want to see some additional trade lines, call it alternative credit. Your best alternative credit documentation is a rental history, if at all possible. So rental history or landlord rating. The borrower could provide canceled checks or a letter from their landlord. Utility bills, evidence the borrowers have made their payments on time, could be provided. Cell bills, storage payments, insurance, memberships, these could all be provided as a great source of additional credit. All right, Part 7, details of transaction. This is important to have as accurate as possible. It's a great breakdown of the required funds needed for closing. There are other methods of disclosure you can give your borrower, but the best breakdown for our underwriters is this details of transaction. In fact, in Newline's system, this is the only place our underwriters can go and what they will use to break down your figures for closing. So if your details of transaction that you're using and the underwriters are different, then you guys are not going to be on the same page. In our system, in the 1003, there is a tab labeled details of transaction. You can go in there, click on it, and you can pull it up and see what the underwriter is using. Once your loan is in our system and we've underwritten it, we've locked you out from editing data, and our underwriters go in and complete, and actually you can view what your final 1003 would look like. I would go to the details of transaction and double check that if you ever have any questions on the funds needed for closing. One thing to know, it's very important to list your lender credit under other credits and explain what it is so the underwriter knows that this is a lender credit. And that would go right here. So this is a copy and paste of your details of transaction. It's a little awkward because it's actually on two separate pages, but all of this information should transfer over from other documents in your file. So the purchase price, the payoff, your prepaid, your closing costs, your mortgage insurance or funding fee, the discount, and then it'll total down here. If there's any secondary financing, if there's any costs to be paid by the seller. Right here under other credits, you would put either the lender credit, and you could also include the deposit, or actually no, the cash deposit, like the earnest money deposit is down here. And remember, if you're counting that against your closing costs, you have to make sure that that's cleared the bank so that your assets don't include money that the deposit that's already cleared the bank, if that makes sense. So make sure that this is complete and accurate. If you get a condition from an underwriter stating maybe you're short funds to close, or there's any question on the funds to close, go to the details of transaction and start from there. Some documentation requirements as a result of this section. Of course, this section is based off of fees and calculations from the good faith and fee sheet. Typically, additional documentation is not needed if these forms match. Closings could be delayed or frustrating if the underwriter is not on the same page. Underwriters don't review GFEs and fee sheets. That's for our compliance department. Their source of information for borrowers' cash to close is the details of transaction. We've talked about that. Okay, the next section, Part 8, declarations. All questions must be answered. Actually, a loan will not be processed if these are left blank. So you've got to go through and have your borrowers answer these questions, and it's very important that you don't breeze through this part and, you know, kind of standardize your answers. You do want to take a little bit of time. There are some very important questions here. One of the first ones is, are they a party in a lawsuit? And if they're a party in a lawsuit and they are the defendant, that could be an issue depending on what the lawsuit's about. To be honest, in all my years, I don't know that I've ever run across this, but I always like to mention it because it could happen. The other things that I mostly see And these are questions we should be asking during the process. So I like this declarations page because it asks a couple of questions that really could have an effect on the loan. If the borrower has marked yes to being delinquent or default on any federal debt, the borrower will most likely fail the CAVRs on this loan. If they fail CAVRs, the loan is dead. You can't move forward. So if a borrower answers yes to being default on any federal debt, because that includes student loans. And I have had a couple of loans already, and I would say about the last 8 months, that failed CAVRs, and it was exactly because they were defaulted on their student loans. So make sure you pay attention to that, and if they've marked yes to that question, you can pull CAVRs early. You just have to send to me the borrower's name and social, and I can pull CAVRs for you if you don't have the ability to. If the borrower has marked yes to being a co-maker or endorser on a note, these payments will probably have to be counted in the borrower's DTI unless you can provide documentation otherwise. So if a borrower has co-signed on a loan, they don't have to use that payment in the DTI if you can provide 12 months canceled checks and then evidence that they are a co-signer. So those 12 months canceled checks have to come from the person who's making the payment. And that does include mortgages. Part 9, the acknowledgement and agreement. All borrowers must sign and date the loan application. If you get a minute, read the fine print, know what you're explaining here. There's a lot of information in here basically stating that all of the information is true and accurate, and it gives you some penalties, a list of the different penalties and actions that could be taken if it's not. So make sure the borrowers do sign and date this. Typically, documentation requirements are not a result of this section unless the application is not signed and or dated by all the borrowers. This could actually lead to a loan denial if incomplete or inaccurate. For an example, it's an issue if the date of the application is after the date of the credit report. So pay attention to your dates, make sure they are signed and dated, and you'll simply avoid all possible RESPA issues and compliance issues. And then the last section is Part 10. This is information for the government monitoring purposes. This section must be 100% complete and accurate. The loan officer must sign and date it. Under the, scroll down here for a bit. Okay, under the ethnicity, race, and sex section, if the borrowers do not wish to furnish this information, then as a loan officer, you need to furnish that information. And it's not a test, it's just your best guess. And I would advise you to complete this after your borrower has made application. I would not complete it before and hand it to them signed with this part completed. Some borrowers will take offense to that. So give them the opportunity to complete it. If they don't wish to, then go ahead and complete it once the application is finished. Make sure that you sign it as a loan officer, that you print your name, that you give us your code, your state license code or your NMLS number, your phone number, your company's name, your company's NMLS number, and your address. Make sure that's all complete. Typically, additional documentation requirements are not a result of this section unless the application is not signed or dated by the LO or it's not 100% complete. This could actually lead to a loan denial if incomplete or inaccurate. For example, how the information was provided must be completed or the loan could be in violation of RESPA and considered non-compliant. So, you do have to make sure you mark face-to-face, telephone, by fax or email, or by the internet. Make sure you mark the appropriate box because that determines how we're going to look at the GFE and your other disclosures in terms of the date and how soon it has to be delivered for the time of this application. All right, you guys, that is it. That's all I have on this. So we are done reviewing the 1003. Again, my name is Chris Duffield, and my phone number is 801-759-8521. My email address is kduffield@nlmtg.com. I am just a phone call away. Give me a call if you need anything. Thanks and have a great day.